Good morning, traders. It's 8:03 a.m. Chicago time on Tuesday, the 6th of September, 2022. Thanks for joining me this morning. I'm at a new location and we're not fully set up yet, so I might sound weird. But thanks for joining me. This is episode 2308. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to change this to balanced. So what do we have today? We have a market that has a mild risk-on tilt to it. And the S&P popping a little bit higher, up 24 points from Friday's settlement. Because yesterday was a holiday, Labor Day, you have what happens there is that the exchange treats Sunday's open at 5 p.m. Central, 6 p.m. Eastern, all the way to today's close is one session. So your high and low may be different than mine. And the reason for that is that I remove the content that is not in today's session. I'm starting today's session with the open of Monday at 5 p.m. Central instead of Sunday at 5 p.m. Central as the exchange does. So things will be slightly different. The chart, the summary sheet here follows the exchange, so it's considering Friday's settlement. There has not been a settlement since Friday. And so right now the market's got a mild risk on tilt, and most of it is because the news flow, over 3 days is going to be a little bit heavier, but there's nothing really significant other than Russia will keep Nord Stream down for longer. They're blaming Siemens and some maintenance parts, but really it's kind of obvious that the Nord Stream feed is being used as a political weapon against Europe. And of course, they're going to probably continue to squeeze into the winter. The good news is that natural gas storage levels in Europe, storage targets in Europe have been hit. Therefore, natural gas prices have fallen. Take a look at this. So you can see them reversing down here on the daily. And so that's, that along with the expectation from the market that that governments in Europe are going to accommodate by removing taxes, by subsidizing energy, and so on. And of course, there are other lines that come out of Russia for natural gas. It's not just Nord Stream, although this is the one that gets the most news. There are other lines that are coming out of Russia, so it's not as dire a situation as we would think. So that's where that is. There's not much else to talk about. We do have some key releases that came out this morning. The RBA, the Reserve Bank of Australia, came in with an interest rate hike of 50 basis points. The prior is 1.85%. And it moved to 2.35%. We do get ISM non-manufacturing today from the U.S. We get GDP growth out of Australia this evening. Balanced trade out of China. Tomorrow we get balanced trade out of Canada, balanced trade out of the U.S. We get the Bank of Canada interest rate decision and balanced trade out of Australia. And then on Thursday we get the ECB interest rate decision. Very, very important here. The ECB is between a rock and a hard place in terms of rising energy prices and inflation, and not having done anything about inflation. So the consensus is that the ECB would raise 75 basis points this Thursday. It'll be the first raise, and this is going to be a significant market event. That's at 8:15. And then the inflation rate report out of China at 9:30 on Thursday. And on Friday, we have the unemployment rate out of Canada. So that's what's on deck for the week. For today, again, we get S&P Global Services PMI at 945, non-manufacturing ISM PMI at 10 a.m., and then, as I said, the GDP growth and the balance of trade out of Australia and China, respectively. Looking at the S&P is in a completely balanced profile, currently trading sideways. 232,000 contracts have traded, which is a little bit on the heavier side, with 100% of the inventory above Friday's settlement, which was 39.2450. The low since yesterday's open is 39.32. So again, we're in a bullish tint, and we are trading in the middle of Friday's sell-off. So we're opening in range this morning. I've had some data issues this morning, but you'll want to ignore this little profile here. This is yesterday's profile. There's just not a clean way for me to remove it, so it'll be insignificant once today's market opens. But what we have on Friday is we opened up higher above the 4,000. We tested the 40.20, went to 40.1950. This is what was expected, and then we rolled over and we pushed through the high of Thursday, and we ended up pushing through even farther into Thursday's range. Friday's trade is quite bearish. It looked like we were reversing as we came in, broke the one-time framing down on a multi-day basis here, and then we opened higher. It looked like we were reversing, ending the one-time framing down, and this is likely to test the 40.20, and I expected 40.40, if you recall, 40.40 and 40.50 as a strong potential on Friday. Did not do so. It ended up pushing back into Thursday's range, which is the low, the most recent low. This represents about 62% pullback on the entire rally from the most recent low at 39.03, and we're basically opening in the single prints from Friday, in this range from Friday. Expecting it to be relatively choppy today. We're opening in range on a selling day. Not a crazy selling day. We still held a higher low. So one-time framing currently is neutral. We're in a neutral stance from a one-time framing perspective. So that's where we stand. We did, we almost closed all the single prints on Friday. We missed the last two by a couple ticks. So the structure there has been repaired a little bit, but we created more weaker structures. So today is expected to pull back a little bit and then start working itself back into this heavy zone here, heavier zone in the 39.70, 75 area. We're currently at 39.44. Anyway, not expecting too much in terms of structure or in terms of rotations today. This is the key target that I just mentioned, this 70, 75 area. It represents Friday's IB low and settlement for Thursday at 68 and so on. And so far, we've had basically a Gaussian profile here, just a complete balance. And we've got the point of control, full session VWAP, full session mid, all on top of each other this morning. We're making consecutive higher lows from a price action perspective, consecutive higher highs, but the overall trading, the actual volume that's going through versus price, remember the higher lows, higher highs is just price. It's just price. But the actual trading volume is not transitioning value higher. We're not seeing a multi-distribution profile with multiple prongs showing that there was progress taking place within the profile. So This to me looks like it is there's a trend line here. It looks like it is very likely that this would poke through the trend line, be responsive towards the prior settlement. 39.2450 is mentioned. And so I expect the market to, we're having an internal gap this morning. So I'm looking for an internal gap to settle down here, test for the base. And then if we do have some real rallying interest or buying interest, it would give us a higher low on Thursday, higher low on Friday. Friday causes us to be neutral, and I would expect us to turn up and start pushing back above towards the 4,000 mark. So that's what I'm looking for today. So what is the overall expectation? Let's look at the narrative here. Let me choose my colors. What are we looking for? On a primary scenario, we're opening in balance in chop. We're opening on top of full session VWAP mid, right around the overnight point of control. Expecting this to chop around here, expecting this to be responsive. There's a potential for a test of prior settlement, although I'm not too hopeful of that. We're opening against the mid-century at 39.50. There's a lot that has traded here. And then I'm expecting this thing to just float around and sideways with an initial test down, but really it wants to keep a bid this morning. The secondary scenario, is an open auction that tests higher, is unable, gets an impulse down back to the open, and then it lets go, fills the prior settlement, and goes and tests around yesterday's or Friday's low, and create and potentially establishing another run at the low and potentially starting one-time framing down. In either case, we're likely to get a lower high today. So if we establish one-time framing down this morning, today, by taking out Friday's low, then the bears are likely to take over again, and we're likely to push pretty hard through the 3,900 all the way down into the 3,800, the 3,800 handle, and the next level down is 3,880 or something like that. So that's what I'm looking for today. I am expecting it to be quiet. I'm expecting not to trade all that much today. There are no real news catalysts. We do have some numbers this morning, this global services PMI, but the key one is the non-manufacturing, the ISM non-manufacturing PMI, which might set the tone. But from here, we did sell off a fair amount on Friday. I expect us to rest, and I do expect us to challenge this low if we follow the normal auction process. I expect this to continue, this impulse down from Friday to continue lower. That's what I've got for you. Again, just make sure you're keeping your risk in check. Make sure you're waiting for the market to come to you. Don't try to chase or invent trades. It's very easy to do so in this type of environment. So just let it set up, let it come to you, and then engage and let the market do what it's got to do. Okay? Good luck, and I'll catch you tomorrow. Take care.